Assalamualaikum warahmatullahi wabarakatuh. My name is Mir Muhammad Umam, and today we going to briefly discuss the 5 professional issues which could arise in such as financial institution or insurance company which need to have a prudential supervision for it to reduce risks that many policyholders and other vulnerable individuals will suffer by putting their money in those such company. First and foremost, it will be the disclosure of information. An actuary role is to provide information that interested party cannot obtain otherwise. It is a key that the value determined by the actuary to be realistic. Actuary need to come up with such a single figure to serve purpose such as being reasonably confident of holding enough money and estimating a profit realistically without bringing a high risk to the policyholder. The second one is another professional issue that could arise from this task is monitoring standards. Every actuary has a joint responsibility for the standard of the profession. Usually a professional guidance committee is provided in a professional body to make sure the actuarial behavior is up to standard. So that means there will be no misguide or something like that. Actuary should consider whether it is appropriate to seek peer reviewer of their works, whether there is a need to formal requirement or informal requirement. The third one is the professional issue that could arise is materiality that happen in the insurance company. Matter of material, if the matter of material is happen when they could influence decision to be taken by users of related actuarial individual or collectively. It is a matter of reasonable judgment that require consideration of every user and the context in which the work is performed and reported. Furthermore, fair treatment is an efficient solution to resolving incomplete specific contracts. In order to delegate the allocation of profit, a person should be agreed to be appointed by both parties. So that means they need to be both should agree to accept this person. The delegate should be independent, expert and impartial. So that means no benefit to only one person. An actuary who would decide how much profit should be allocated to each policy at interval, which means actuary also decide what term will be offered on a policy which was altered or surrendered. Actuaries also need to consider what type of fairness can arise in relation to pricing the product. Last but not least is data. The problem that could arise is data quality. Data checks are carried out appropriately and action is taken to deal with information. So action is taken to deal with incomplete data for users to rely on the information. This actually should be skeptical about supply data so that users can rely on the neutrality of the information. That's all from me. Thank you.